to prepare for the distinguished speakers. These questions are aimed to ensure that there's a balanced conversation. So at the end of the day, for all of us that are online also, we will give an opportunity for you to be able to ask questions because I know that today a lot of people into effect, and everybody wants to know the implication that is going to have on their businesses, apart from your businesses, even your individual lives. And that is one of the aims of the webinar this afternoon. So, very quickly, I want to introduce my distinguished panelists. First and foremost, I would like to introduce Mrs. Funke Oladuke. Mrs. Funke Oladuke is a tax consultant and she works with Deloitte, and she's had quite a large experience in all what we are going to discuss this afternoon. She has worked around the health industry. She's a partner currently with Deloitte in charge of tax and regulatory services. She has over 15 years experience and she has covered a broad spectrum of tax practices. She has handled mergers and acquisitions. She has provided tax support services to clients that cuts across life sciences and also, like I said, the healthcare industry. In the course of her work in mergers and acquisition, she has done a lot in terms of tax restructuring, regulatory compliance, expansion and entry advisory for business owners, feasibility studies, jurisdictional analysis, due diligence, international tax advisory, as well as tax deal support. She has a wide experience providing tax compliance and tax advisory services to clients in the industry. She has a BSc in economics from the Obafemi Awolowo University, Ile-Ife. She's a member of both the Institute of Chartered Accountants of Nigeria and the Chartered Institute of Taxation in Nigeria. She's also an associate member of the Association of Certified Chartered Accountants, and she holds a master's in finance from the University of London. So on this note, I'd like to welcome Funke Oladoke to the panel. Thank you so much, Funke. You're welcome.
Thank you, sir. Good afternoon, everyone.
And our second panelist is somebody that is well known also in the health sphere, Professor Cheluchi Onyemelukwe. Professor Cheluchi is the managing partner at Health Ethics and Law Consulting. She has provided legal and regulatory advisory uh, services, especially in the health industry. She was actually instrumental in crafting state health insurance laws for the states when the state health insurance programs were starting. She has advised governments, regulators, healthcare business across value chain, including hospitals, laboratories, clinical research organization, the pharma industry, as well as non-profit foundations across the country. She has provided advisory services also for a lot of people in the health industry. And with our organization, which is the Health Ethics and Law Consulting, she has provided legal and regulatory advisory services for even tech startups. So she's somebody also that is well grounded in the area of digital transformation. And she has helped to navigate legal and regulatory landscape on supporting scaling in a lot of project financing work. She's somebody that consults regularly for the World WHO, the World Bank, and then the African Union Commission. Uh, she's also a professor of law at the Babcock University School of Law, and she holds a doctorate in law from the Dalhousie University, Canada, and her first degree also is in law, which is from the University of Nigeria, Nsukka. So you're welcome with us this afternoon, Professor Cheluchi.
Thank you very much. It's a pleasure to be here.
All right. So like I said, we don't want to waste time because we know that a lot of us that are online this afternoon, we're actually eager to learn a lot about this upcoming law. The upcoming law is something that is like still cloudy to a lot of people. And a lot of us actually want to interpret it, especially how it affects us as individuals and also how it is going to affect our businesses, especially for those of us that are in the health sector, the private health sector. And that is one of the reasons why we organize this webinar so that we can actually unpack these laws. The law is actually divided into so many aspects because we have the main law, which is the NTA, that's the Nigerian Tax Act. And apart from the Nigerian Tax Act, we have three other laws that are associated with these laws. And a lot of people don't even know the implications because we have what we call the Nigerian Tax Administration Act, we have the Nigerian Revenue Services Act, and then we have Joint Revenue Board Act. All these four laws are intertwined together, and we need to unpack them to be able to understand how it is going to affect us, especially for those of us in the private health sector. So without wasting time, I want to just start with Funke this afternoon. Funke, well, you are sitting in a very desirous position today because you are the one that needs to unpack these laws for us. We want to know the implications. Like I said, we are looking at what are the implications for individuals because what makes up the private health sector starts actually from the individuals. And then we also want to know the implications that is going to have on our businesses. But before we go into all that, we need to understand this law and the three children that it brings with it. Because, like I said, the main law is the Nigerian Tax Act, and then it comes with three siblings hand in hand, which we need to interpret. So the first thing we need to do now is for you to be able to break these laws down for us. Let us know what these four aspects of the new law actually means for us as individuals and then as business owners. As we are going into the discussion, we will now dive into the implications for the private healthcare providers. But for now, about so that we know what to prepare for.
Okay.
Thank you so much. Over to you, Funke.
So thank you so much, sir, for the introduction. Sir, can you hear me very well?
Yes, we can.
Yes, we can. Okay. Also, so much for having me. I think in recent time, I'm not sure there has been any act of the government that has generated so much conversation. And the reason is simple, because as individuals, as companies, we are liable to pay tax. Anyhow. So you pay tax as a corporate, and then you pay tax as individual. Even if you don't pay tax on your income, you pay tax when you buy things. So it has generated a lot of controversy. We're leaving the politics aside. We're just focusing on it. And so it's a good thing to have this conversation because a lot of people are still not sure of what this is all about. So they are asking questions. And so the objective this afternoon is just to go through some of the provisions that may affect the caliber of people that we have on the call. And when I say that, it's because I'm also aware that we have big businesses, we have medium-sized business, and we also have small-sized business. So in a way, it cuts across the different sections. So what I would do is I'll spend the next 10 minutes just call out specific clauses or specific provisions. I want this to be as interactive as much as possible. So I'll spend 15 minutes, 10 minutes, 15 minutes to go about to just call out specific things that may be of interest to everyone on the call. And then after that, we can have an interactive session where you ask questions and I can provide some context to some of these provisions. So if that is acceptable, what I'll now do is to share my screen. Please let me know once you can see my screen, please. Sir, can you see my screen?
Not yet.
Okay. Okay, pending when I have that, let me just
That's okay.
I know you wanted to send me, you said they were going to send me something that can give me access to be able to share my link.
I think you have it already as a speaker, so you can actually share the screen. But if not, you can share the presentation maybe as we are progressing. Okay.
Okay. Okay, so let me just start while
Okay, go
it
ahead.
will share
Yes,
itself
please.
very soon.
You are you can try it now.
Okay. All right, so I can try it now. Yeah, you have made me a host now. Okay.
Yes, please.
You have to give me access, sir.
Okay. While we're doing that, maybe you can just continue. You can
Okay, so
just
you have to give me
start
access.
submitting.
Exactly. So while we're doing that, I can just continue. So what has happened is that there has been a change in the tax law, right? And what has happened is that there are four laws that has been put in place. Okay. And what drove this is the fact that, look, there were a lot of complaints, right? Some people said, look, it's the same set of people that you are taxing every time. Okay. While there were complaints, on the need for them to expand the base. So rather than focus on the first 10 or 20 people that normally, that have been paying taxes before, we need to expand it, right? And so of course, there were conversations about digitalization and modernization of the tax admin generally. There were, of course, from the federal government side, there was also revenue mobilization. They needed to make more money. And of course, there were complaints about the fact that some of the provisions of the law, they are archaic and it doesn't align with reality. So what they now did was to look at all the tax laws, right? They looked at everything, FRS, Establishment Act, this act, that act, everything, and looked at it, and they came up with four laws. So the first one is the Nigerian Tax Act. This one is the one that speaks to the tax provision itself. So what it did was to consolidate all about 16 tax laws and put them in one bucket. Okay, so that is the first one. The second one was the Nigerian Tax Administration Act, right? This is just to guide the way companies operate generally. And then the third one is the Nigerian Revenue Service Establishment Act, which essentially guides the former FIRS. FIRS is Federal Inland Revenue Service, which has changed name to the Nigerian Revenue Service. So it guides their operation, how do they approach this and that. And of course, the last one is the Joint Revenue Board Establishment Act. And like Doctor has said earlier on, this is the one that provides the basis for the Joint Revenue Board, the Tax Appeal Tribunal, and the Ombuds, which I will speak to later on. So if I take all the four of them, somebody can ask, what are the specific call-outs, the things that are in these laws that can affect us, in the industry that we operate? So if I take the first one, which is the Nigerian Tax Act, what it essentially does is that the first thing that I will call out is it redefines what a small company is. And the reason is simple, because small companies are exempt from paying tax, corporate tax. So what this has done is to say that, look, so before we have, if you're earning, about 25 million, you are exempt from tax. But of course, the reality now is that we need to up the number. So what it did is that it says, for you to be a small company, you can still be making up to 50 million. So if you're a company that your turnover is about 50 million and the total asset that you have is less than 250 million, if you look at your business and you fall in that category, it means that you will not be liable to corporate income tax. So it gives you an exemption, right? Then the next thing, I will talk about the filing later on. So the next thing is what we call fiscalization, right? What does it mean? It's e-invoicing. So it's a rule. Typically before now, if you want to raise an invoice, right? When you raise an invoice, you have a booklet, maybe a booklet or something on your system that says, "Oh, my name is this and that company, and I'm selling to Funke," and then you just draw up the invoice, you print it, you send it to the customer. What it's saying now is that you need to make that your system align with FIRS. But there's an exception to that anyways. So it says as long as you are not making up to 500 million, you don't have to do this. But once you are big enough that you are now exceeding, you are getting close to 1 billion or thereabout, what it says is that your system must align with FIRS, such that as you are raising your invoice, the FIRS is getting an alert that you are raising invoice for services that you have provided or for sales that you have made. Like I said, they are still looking at the big, large companies for now, but it's just a matter of time. And somebody has said, why are they asking for that information? For now, what we've heard is that it's for information gathering. It's just to be ensured that in a year, if you say you have raised 10 invoices, when you go and file your returns, they can look at 10 invoices and say, oh, you have reported the 10 invoices. Of course, after that, there will be other uses that they will put it to. So that's the second major call out. The third one is to encourage you getting a loan. So you are in a business, you need a loan, right? When you get loan, you pay interest. Okay, so when you pay interest, they are saying, we recognize the fact that you pay interest, and so that interest that you are paying, we recognize that is a valid business expense. Now, with a small catch, right? So they don't want you to, for instance, if your turnover is 100 in a year, that is, your sales in a year is 100, you cannot take interest deduction that is more than 30. It's just to make sure that there's no abuse, because, I mean, in the end, it's possible that two people that are related, they take loan, okay, and then the loan, the interest they are paying on it is 80 out of 100, in which case, all things being equal, you're only paying tax on 20. They don't want that to happen, so they are limiting it to 30. But the fact remains that if you borrow any loan and you are paying interest, that interest will be recognized as a valid business expense. The fourth one is for medical and pharmaceutical products, right? So before now, they used to categorize that as exempt. What does it mean? It means that if you are selling an item of, a pharmaceutical product, right? Let's say you are selling a Panadol, or you're selling a service that is medically related. When you are billing your patient, or you are billing the people buying those things from you, before now, it is exempt, so you don't put VAT on it. There's no VAT, right? So that's why people say, oh, it's an exempt, it's free. When you go to hospitals, they are not supposed to bill you. So there's still no VAT, right? But this time around, when you are drawing up that invoice, you put VAT, but it will be at 0. Now, somebody can ask, if you are selling at 10 and customer is still going to pay 10, what is the difference between exempt and 0? It means that if you have incurred a lot of things to produce that product, let's say you're producing, an iron tablet, okay, and in producing it, even though you are selling it and you are not charging VAT on it, right? But in producing it, you bought water, you've bought chemicals, you bought some things, and those people selling to you have charged you VAT. You can then go back to government and say, you know what, I didn't charge VAT when I was selling the iron tablet, right? But I know, but I've incurred a lot of VAT when those people that were selling the materials to me give me back my money. So this is what this one is essentially saying, okay, to say that it is now zero rated. And an offshoot of that is to now say that, so when you then incur it, what you then do is that you can go to government and fill a form and ask the government to refund you the money. So, I mean, just to keep it as simple as possible. Again, if you are into a business, your business has to do with research and development. So you produce medication, you produce syringes, you produce a lot of things that require, research, right? So in the old law, what it says that whatever it is that you have incurred on research and development, it says you can claim up to 10% of your profit before tax. So let's say you have incurred 50 on research and development as an expense, and your profit, it's about let's say your profit is 100. It has limited you to the amount that you can claim to be 10. But this time around, it's saying no. We are not using profit as a basis for determining what your valid research and expense is. Meanwhile, we are using turnover. It's a big one, because when you have a percentage, even if it is 10% of profit, it's still going to be much more less than 10 or 5% of your turnover. So that also came on board. I think the third one, the another one is the development levy for some of us that have corporate that file corporate returns. When you file your corporate returns, you pay company's income tax at 30%. You also pay what we call education tax, and some people pay a little few levies. Some of them can be as much as, when you cumulate it, it can be as high as 7%. It can be as high as 6%. But what they have done is that all those levies have been, you know, technically erased, and they are saying just limit it to 4% effectively. So for people that are paying 6, this is a welcome development. For people that are effectively paying less than that, of course, you know what it means. And I think from a personal income perspective, they've also changed the band, right? So what they have essentially done is to increase the amount of money that, your income that is not going to be taxable. So they have increased it to up to 800,000. That means if what you are earning in a year, or any employee that earns, up to 800,000 in a year, will not pay any tax. Actually, when we did the simulation, the people that will be affected, they are people that have income that are above about 25 million. So once you are earning above 25 million, you will pay a higher tax in this regime. And I think the last word I want to call out is that in computing your payee, pay as you earn, because I know a lot of us are probably employees, or we are in employment of a company. So what happens in the old law is that they give you what they call a consolidated relief allowance, which essentially says 20% of your income thereabout, you will not pay tax on it. What they have now done is to remove that. That means what the amount of your income that will be liable to tax has now increased. Again, if you are earning less than 800,000, you probably not be bothered. It's only people that have higher income that should worry about it. I think quickly I'll just go to the Nigerian Tax Administration Act, which says that if you're a taxable person, you must register and obtain an ID. So gone are those days that you are doing business, you probably flying under the radar, you're not registering, you're just, let me just maintain my position. Now there are so many provisions in the law, and I think maybe one or two I will mention later on, which speaks to the fact that you will now need to register. And you need to register because there are demands. Again, small businesses are also exempt, but small businesses are exempt, not that they are not. So the fact that you are not paying tax doesn't mean that you will not file returns. So you file returns, and for you to file returns, you must register and get an ID. Another thing that I think is very good that they also introduced is the VAT refund, which I spoke to you about. They have given them, so it's possible in the olden days when you put in for a VAT refund, it can take them 4 years to do. They have limited it to 12 months. If you incur those expenses, you have incurred a valid input VAT, you put in a refund within 12 months, they are going to you can put it in, and then within few days, they talked about 30 days, but everything will take about 1.5 years, 12 months, and then 3 months they will give you back. So I think there are some that require, so if you're a small company, obligation to withhold tax has been removed, which I think some of us are conversant with this. Once you are paying a person, you are expected to withhold tax. It says you are no longer required to do that because you are a small company. And I think I've described what a small company is. Another good thing is that when the tax man comes to you and gives you an assessment and you object, if for whatever reason they didn't respond to you within 90 days, they are saying that is final and conclusive. So you can say, oh, but I responded 3 months ago. You are the one that didn't come back to me. So the tax authority are supposed to let you go, right? But I'm hoping that it's not a case of, investigation as it were. So like I said, but if you are not doing all these things, there of course these penalties are also stiff. It can be as high as 50,000. They can penalize, any principal officer of the company if they feel you are not rendering return as you're supposed to be. So I mean, before it used to be the company, but when they know that you are a director of the company and the company is not doing what it's supposed to do, they can actually hold you liable. So the directors, the principal officers of the company, the CFOs, and all that, they need to be aware that they can hold you liable for the tax of the company if the company is not doing the right thing. Finally, I think, okay, so for the joint tax board, I think it's just administrative stuff, where you say you have the joint tax board, they have the tax appeal tribunal. There used to be tax appeal tribunal, but it was only limited to the federal taxes. What they are saying now is that it won't extend to the state. So they can hear states involving the Lagos State Inland Revenue Service, for instance. There's the ombuds, which is like an independent tax, people that can look at your case, have an independent mind, and give an opinion on it. And I think for the last one is just to talk about, so what they need to do, having all these, is just to prepare. Like I said, what I want to do is to introduce the topic. I think from the questions and the interaction, I'll be able to provide more context to some of these changes. So I would like to stop for now.
All right. Thank you so much, Funke. I think it's quite explanatory. You've actually gone around a little bit. Prof, now I'm coming to you. You are the lawyer. In terms of this audit and enforcement, based on all what Funke has said, especially in terms of rendering returns, in terms of filing your taxes, what do you think would be the legal implications for both individuals and then businesses, especially the healthcare providers, in terms of not complying? What do you think the law has in stock for us?
Thank you very much. It was a pleasure to listen to Funke, and I think, as a matter of fact, she touched on it because all that everybody, well, most people that are going to talk about the tax reforms are talking about are the key provisions of the law. So she touched on that. What has happened is that we are looking at a situation where there is a simplification of the regime, such that your obligations as a taxpayer become very apparent to you, become visible to you. And at the minimum, you should be, or we should all be familiarizing ourselves with the information. We have previously had, some might say more than 50, some might say more than a dozen, but many pieces of legislation or laws, tax laws, which we have now coalesced into these four tax legislation that she mentioned earlier. So the idea is that while they're all still quite bulky, 200 sections, in the Nigeria Tax Act, it is a bit simpler. She's mentioned some of those obligations. You have to have a tax ID. You have to, if you're a large company, you have to do your e-invoicing and align with the requirements of the NRS as it will now be, etc. But you have to file your return. You have to file your return whether or not you have made money or not. And for each infraction, which is a failure to meet some of these obligations that she has, very clearly written out to us, there are stiff penalties. We have penalties ranging from 50,000 naira a day to 50,000 to 100,000 naira a day. And of course, for many businesses, that would be extremely challenging. It is law. It is not. There are also possibilities of, administrative fines. And of course, you may well find yourself as a healthcare provider, healthcare business facing those penalties for failure to file your annual returns with the relevant tax authority, and failure to pay tax as and when due, and paying penalties on what is outstanding. We're also looking at a situation where we will still have obligations depending on what kind of entity we are to make returns to the Nigeria Revenue Service, as well as our state internal revenue service. All of that, I mean, the end of all of that is that essentially we will have to then face penalties if we don't comply. I think that is the simplest way to answer that question. So of course that requires that we update our systems, that requires that we make the pay deductions, and so on and so forth, and we clearly define benefits, etc., for our employees. But I think I'll leave it at that.
All right. I'll still come back to you, Prof, because there are some other things I want to bring up from what you just said. But very quickly, there's one aspect of it that I think Funke needs also to clarify to us. Funke, sorry, there's this issue of what they are now calling presumptive taxation, which actually means just like what PHCN is doing, where they have what they call estimated billing. So where you don't have a prepaid meter, they start what they call an estimated billing. And I see that this also is incorporated into this law. So where your records are not complete, the government or the tax authorities have a right to start what they call a presumptive taxation. What does this mean for private healthcare providers?
Okay, so thank you. So it's as you've described it. So what they've found out. So one of the issues that the tax authorities has had in the past, or which people have alleged in the past, is that the tax authority are focusing on the same set of people, right? And for them, so for those people, they think, why not cast your net wide, right? So look for other people, okay? So what they've done is to say, look, when we see a particular company, or I go to company A, I see a particular name. They are going to use a lot of artificial intelligence in this, right? Because they are also prepared. Then I go to company B, I see the same company supplying them. Company C, to audit them, and they give me a list of people that supply you, and they see the same name. So what their system will do is to collate to say that, because you featured in 3 or 4 places, and we are not seeing anything that suggests that you are rendering return, or the return you are rendering shows that you are not liable to, or you are not be paying taxes maybe in 2 or 3 years, and they see the turnover. What this has done is that the law has empowered the tax authority to estimate and say, based on what we've seen, based on the fact that A Limited that operates in the same industry as yours have an effective tax rate of 15%. When I look at another company, that operates in similar, has the same size and everything, also is about 16%. So what they will do is that all the information they've seen, about you, maybe through the bank or whatever it is, they will impose a tax, on it, and then assume and then request you to come and pay the tax. Okay, so it's not based on anything. They don't have any financial statement, they have incomplete record, but the law has empowered them to give like an estimated tax. Now, when they then give you that assessment, some people will think it's reasonable, especially people that are making much more than that. But if you know that you are not making up to that, maybe your margin is just about 10%. We all know that most businesses don't have such significant margins anyway. That will force you to come out and then come and render return, right? So they will do two things. They will get more money, and then for people that think their taxes should not be up to that, is something that will make them to now go and pay tax. So in the end, also don't forget that the banks they are also rendering returns. So once they have money, or you are depositing or you are transferring money above a particular threshold, right? They will flag it, they will report it. So all these things, FRS is plugging into it to make sure that they get maximum information about you, especially when they check their records. There's nothing to suggest that you are even filing returns. So they have been empowered to assume what it is, assume a profit margin, apply the tax rate of 30%, and then issue you an assessment. And if they can't get the company, they will look at who are the directors of the company or who is the CFO, and then they issue that CFO that assessment, and it has to be paid. It's the law.
Okay, thank you so much. I think this actually also includes looking at lifestyles of even the people behind such businesses, especially for the healthcare industry, what we are talking about. Because one of the things that the law also says is for them to be able to look at the lifestyle trends of even the people that own these businesses. Prof, as a lawyer, what are the legal risks that business owners, especially in the private healthcare space, should actually be careful about in terms of this new law that is coming out in 2026?
Thank you very much. Thank you to Funke for pointing that out. I should also mention that in terms of the presumptive tax, so many things, there's a wide, broad powers are given for them to really investigate the company, and the law has provided a legal basis for this, and so I think it is in the best interests of that they can to have appropriate records, I would say, so that you don't you're not in a place where you are seeing quite a bit. Obviously, you can still challenge that through the appropriate dispute resolution mechanisms under the law, but I think it's extremely important that we begin to think in terms of records and keeping our records clearly. And that also relates to the question that you've just asked me. In terms of the legal risks, the legal risks, of course, include the fact that people are going to be paying. And companies are going to be paying a little bit more in some cases, particularly if they're big companies making significant profits. I know many healthcare providers in the room will say this is not us, but of course, the different definitions of companies, small companies, etc., 100 million and less, and so on, have been made, have been set out very clearly. So we're likely to see some increase in taxation. Areas like the capital gains tax have been touched, so that if we decide to sell our business, a healthcare business, and JAPMA or anything like that, we're likely to pay significant taxes, about 30% now, up from 10% as before. For those of us, and many of us in the room might be in the space where we receive income in different parts of the world, etc. We also see some of those. We have to start paying attention to that because now worldwide earning is taxed, and taxation is residency based with require. So, for example, if you have key assets here, regardless of the fact that you claim to live outside the country, etc., you're likely to be to have to now pay more significant taxes, perhaps, than you have previously had to pay. In terms of payee and all of that, Funke has kindly laid that out. We will likely see more people coming in within that band. There's been a removal of the consolidated allowance under which we hear, should I use that word? Under which we, preserved much of the income of employees, and so we're likely to see that. So in terms of legal risk, where compliance is going to be strict, I imagine that they will start with the bigger ticket companies before they come down. There will be more strict compliance, because at least in the first year to 3 years, as well getting ready, they will like to show us that they are really serious. So very critical for everyone to understand their own tax brackets, etc., and know that we're likely to see enforcement. I also see there are a few areas of concern for me as a lawyer. When I look at that definition of small business and the exception of professional services, I worry about whether that means that as a healthcare provider provides very specialized professional services that we cannot take advantage of being a small company. That's something that I imagine, will continue. We will have to really clearly understand from the tax authorities. So if we look at that definition, it defines professional services as services provided by an individual or a firm having specialized knowledge, skills, and qualifications in specific fields, including consulting, planning, or support services. Happy to take Funke's comments on that. There's also the risk that if you then appeal to court, you have to pay a 20% deposit under the NTA. Some of us have had conversations internally about whether this will be considered unconstitutional, especially in light of previous judicial decisions. So if you were to ask me, without going into too many technicalities, I think that the first thing to understand is that we have to comply strictly, but also that there are gray areas where we still need to unpack. And I imagine that in the next few years, we're likely to see decisions of courts on some of these provisions, which will clarify for us what they truly mean and what we should expect in terms of compliance. I think I'll stop there. Yeah, thank you.
All right. Thank you so much, Prof. Funke, I'm coming back to you now because you've actually talked about exemption thresholds. And I want us now to nosedive into why we are here today. Implications for healthcare providers, which is something that is paramount to us in Healthcare Federation of Nigeria. We have a community that we are also protecting their interests. We have a community that we are speaking as one voice on their behalf. You've talked about these exemption thresholds, turnover under 100 million, assets under 250 million. A lot of facilities that we have today, because of the need for specialized equipment, at least a lot of them don't fall under that category. That is one side of it. The other side of it is that a lot of them are now going out looking for financing, looking for people that can actually help them. We have a lot of facilities in Nigeria that are depending on international donors to be able to enhance their facilities. What implication will this bring to the healthcare sector if a lot of these capital gains are also going to be taxed? And the other side of it will now be what implications will it have even on the individuals? We are trying to maintain the staff strength that we have in Nigeria. A lot of people are japaning now. And if you are looking for specialized services, these individuals that are going to pay, what it implies is that they are also invariably going to pay more tax. Okay.
Okay, so yeah, so thank you, and I think is the concerns are quite valid. Unfortunately, what we have is a blanket statement from the tax authority. What we know, just like Prof has said, is that as with every law, right, there will always be guidelines that will be issued, right, by the tax authority. I know they are working on a lot of them now, as where they will provide clarity, So, like you mentioned, it's possible that the company has, maybe turnover is less than that, but the asset is more than 250. Okay, because there's a lot of financing. What they have said is that it has to be, both of them, right? But situations arise where, you find companies that are not really, that doesn't fall into that category. And I think that is where, the guideline would give us, further clarity into this. That's number one. Number two, there's also the place for organized, bodies like yours, So because of the peculiarity of your industry, right, there are some things that maybe they are in the law that we need to interpret in such a way that favors your members, right? And that's where engagement comes in. So when they issue the guideline, you see it and you think that they need to tweak it one way or the other. What I know is that the people that came up with this law, they are very, very knowledgeable. I mean, without any hesitation, they are. I mean, you know the chairman of the Fiscal Reform Committee that made the recommendation. I mean, and all the members, two of our partners were on that committee anyways. So they are quite knowledgeable, but they also recognize the fact that so when some of the nuances, especially some of these ones that you have mentioned, they will need to take it into consideration. But that doesn't mean that they will probably, I mean, it might not be an immediate relief, right? It might be something that, when they now look at it and there's so much uproar to say that, look, it's a small business. Some of the things, some of the assets that they have is being funded by all these donor agencies and this and that, so they look at the peculiar, they can amend or issue guidelines, but it will require a lot of, stakeholders engagement. I know you probably have seen specific industries in the past where they've engaged with the FRS to say, look, this thing doesn't work this way. We have lean member of staff, right? These people are barely earning, they are earning small amount of money. So when you even put them, the moment that they are above 800, then you say you are taxing them. I don't think it's fair, but that is an engagement. What they have not done is at least release the law, right? So guidelines will follow, right? And then there will be engagements, when they think that it's not realistic or because of the peculiarity of a particular industry, then they make them. They can issue guidelines. They've done it in the past where they say for specific set of people, healthcare practitioners that have turnover less than this or this and that, these are the additional, relief, or as it were, that can be granted to them. But until we do that, it's at the preliminary stage. What we have is just the law. They've just dumped the law on us to say this is what it is, and that's why they've given enough time for it to kick off. So if you notice, the one that was released about 1 month ago, they've tweaked it a bit because the energy and natural resource industry, they kicked back on some of the provisions and they've amended it. It's a subtle way. Nobody, I mean, if you don't pay attention to it much, you won't know that they've amended almost 3 or 4 clauses in there to reflect reality, because those people went and said, look, this thing can't work for us, right? So it is for us to identify, for us to engage, and then to ensure that when they are coming up, with whatever it is that they are coming up guideline, they factor in the peculiarity of the people that are on the call.
Just like you said, at this stage, I think we need to make it more interactive. So I want to actually take some of the questions from the audience. We have a lot of people here, and I'm sure they have concerns also. There are some questions online that I'll take, and then I'll give opportunity also for people to ask direct questions for those that want to ask direct questions. There's a question here that says, good afternoon. I would like some clarification how this will affect independent consultants. These are people that consult for clinics and are paid based on consults done minus withholding tax. And they said their payments vary from month to month, and also because some treatments are paid over a number of years. How do you self-assess such people, especially when you are the one that supplies all the materials you use for treatment?
Okay, so individuals that you are independent consultants, you're supposed to assess yourself to tax. So what happens is that if you, at the end of the year, they expect that you will do a self-assessment of your income, your expenses, and what you are liable to. So over the year, you can't pay tax on an income that you have not earned. And you can't pay tax based on estimates. So if you are in an employment that, let's say if you are not an independent consultant, you are in an employment, yours is easy. What we do, for instance, maybe my own firm now, is to say, oh, this person is going to earn 15 million in a month, in a year. So I can do the calculation and then they pay monthly. You can't do that. So what happens is that at the end of the month, they will take withholding tax from your income. But at the end of the year, you are expected, in this year, this is how much I earned. These are my expenses, right? And this is the tax. When you get the tax, you say, let's say your tax is 100, but the people that you supply to have withheld whatever amount, maybe they've withheld 90, be sure that when they are withholding, you get your evidence, which is your credit note from them. And then you say, oh, based on what I've earned in the year and all my expenses, because I don't only consult, I supply, but in supplying, I also buy things. So you net everything off, you get a profit, and then the profit you say, okay, so what is the tax? Once you get the tax, you say, but wait a minute, I've suffered withholding tax. You net it off, and whatever balance, that is what you pay your tax on. So it's a self-assessment. And when you do that, unless you do that, if you don't do that, for instance, you can't get a TCC from government. And when you are proposing for another job, or somebody has asked you to submit a proposal, they will definitely ask for your tax clearance. And the tax clearance will not be given to you if you don't even file self-assessment in the first instance. So that is how it works. If you have not earned it and you are going to earn it in the next 2 or 3 years, you are not going to recognize it because you've not earned the income anyways. What you have earned in a year, you collate, you render return, you pay your tax, you net off whatever it is has been deducted as source, and then you pay the balance. You get your clearance, and then you bid for other jobs again. That's how it works. It's self-assessment.
All right. Thank you so much, Funke. I think this one is also directed to you. So maybe very quickly, you can just take this for us, because this person is actually concerned about, especially now that we are trying to make health insurance mandatory in the country. There are 2 forms of payment that health insurance uses, and that's the capitation and then fee for service. How will tax authorities now look at capitation that is paid directly to facilities and then the fee for service that is paid to health maintenance organizations? what happens to these fees? Because at times you find out that even the risk that they are carrying, both at the provider level and the intermediary who is the HMO, is more than what they are being paid. What implications will this have on facilities that are receiving capitation and then the HMOs that are receiving fee for service?
Okay, I think that you need to understand one fact. So when you have the HMOs and everything, HMO are their insurance basically, right? So when they pay, insurance premiums are not taxable, right? So it's not something you pay tax on. What they pay tax on is there will be some adjustment, and I mean for people that are quite conversant with just like the way the insurance happens. So you have to make a separation between the insurance payment and what you are actually paying for the service. You are not supposed to pay tax on premiums because that is what you use to, because they are just premiums, right? What you then need to do is to ensure that whatever it is that you are paying tax on is only on the fee that you have earned for the service that you are rendering. So there has to be that separation. Once you lump everything together, and that's why it's always good when you are paying. If you're a company, for instance, I would expect that those that audit you would have made that distinction, right, in your financial statement to say, look, these are the premiums, this is the fee, so that at least when you are preparing your returns, you know what you are fixated. Otherwise, you'll be paying income tax on what you are not supposed to pay for. So, and that is where the issue of having a proper account, right? A proper account that makes full disclosure of what it is. So when you do that, and even when the tax authority makes a mistake and takes all your inflow, for instance, as tax, then you have a right to go there and challenge them and say, look, you don't understand this business. First explain to, I think that's maybe I should even start with that. Please don't assume that they understand your business. At times, I mean, I can remember a conversation I had last week, with a friend of mine that went to a tax office. And when he got to a point in time, after so much fight, he said, look, I'm not going to have this conversation until I have an energy expert in the business, because the energy expert will understand how my business is. So I think the point I'm trying to make is that, look, you may need to engage at times to say that, look, this is how, when you see inflow into my account or you see payment from this person to this person, let me break it down. Everything is not fee. And it is only when you are able to isolate that they can fix themselves on what is your fee and then leave what is not taxable liable to tax. But it's about record keeping, and it's about engaging, and it's about explaining to them, because it's not everybody that understands the business that you are doing.
Okay. Thank you so much. Prof, I need to come quickly to you on these questions because I think these are legal implications. Somebody wants, one of the questions here is that should a company continue to run with a business name with this new disposition or run as a limited liability company? What are the advantages of running with business name as against a limited liability company? That is one. Then the other one is now saying, please, can you give us a clear distinction between what the different roles of the federal is going to be and what the state tax bodies will be? Did you get those two questions?
I believe I did. Thank you very
Okay.
much.
So the first one is difference between a business name and a limited liability company in this new disposition.
I think the definitions remain the same, because I mean we have Companies and Allied Matters Act, which define those terms, and they remain the same. So in essence, companies are companies. When the legislation, when the Tax Act or the Tax Administration Act talk about companies, small companies, or they mean companies. They don't mean business names. So in that regard, just as we do it currently, you pay. I mean, if you employ people, you still remit your pay in the same way that you would, and the directors of the business entity will also do their own remittance. So I don't think that that changes significantly, and I stand to be corrected. If you're a company, then of course you have to comply with the different obligations that we have been talking about all along. Whichever way, there are going to be impacts and implications. For example, if you are like the independent consultant that earlier asked that question, they still have to remit their taxes in the way, make sure that they keep their records accurately and remit their taxes in the ordinary way that they would have done. And of course, if they have other people working for them, do similar. If you're a company, then you have to pay company tax, and that is as set out depending on how big a company you are, whether it is from 30% down to whether you're a small company and you are exempted at that level. So I hope that that answers that question and so on. Remind me what the second question was, please.
The second question was actually
About
about
the federal
the
and
federal and
state.
the state regulatory powers.
Yes, okay. Thank you very much. I think that is also that to what I've just said. So the federal powers remain the same. Companies tax go to I was going to say the Federal Inland Revenue Service, but to the NRS, will then go to the NRS. The states will continue to collect the payee. But if you look at at these pieces of legislation, you will see that a lot of support, because of trying to, in essence, integrate the tax administration, make it easier, that we're likely going to see, information sharing between both the states and the federal that is provided for in the legislation. You will see a lot of collaboration between those in trying to ensure compliance, and in sharing intelligence, tax intelligence. That's we're definitely going to be seeing a lot of that, and room for that is made under the provisions of the law. There, within legal circles, we've talked about, the issue of VAT, etc. But as things stand, the federal government is still going to be collecting it while remitting more than it used to the states. Some have called it, it can be a politicized process, but the idea is really to support the states in ensuring that VAT is collected, and I think the federal government is hoping to continue to do that, despite movement by some states in the past, arguing that VAT should constitutionally be within the remits of the state. So outside of that, we're likely going to see that it may not change. In practice, it may not change extremely much, except that now we're going to see perhaps more people entering into the higher tax band and having to pay those things. On this question as well, I'm going to say let me let Funke speak to it. But legally speaking, under the provisions of the law, the state and federal are expected to collaborate, if you like. The federal is still going to be collecting taxes that it is constitutionally required to under the Constitution, because some of those taxes are exclusive matters. We're going to see that continue to be collected, but the states receiving a whole lot more. In terms of practical implications for businesses, including healthcare businesses, they are going to be required to continue to make remittances to both the federal and the state, depending on the kind of entity that they currently have.
All right. Thank you, Prof.
Yeah, absolutely. Okay.
Sorry, Prof. Thank you so much.
Yes.
Funke, I want to take off from where Prof stopped now, because she succinctly mentioned something which I want to take from one of the questions that I have here. Let me first recognize Mr. Kayode Adeshola. Mr. Kayode Adeshola is the National President of Association of Private Healthcare Providers. You're welcome on board. And he has a question here, which actually talks about multiple taxation. Private practices suffer so many taxes and levies. You have the business premise, you have the fumigation fee, waste management fee, ultrasound fee, fire service fee, laboratory levies, radio and television, advertisement, signage, on and on and on and on. In this new tax reform, does that take care of, like you said, all these little irritants? Funke.
Well, I don't think it will, and I will explain to you. And is just starting from where Prof stopped. So, what we have is that we have there is a regulation that talks about federal taxes. It's called exclusive list, which are the taxes that are collected by the federal government. There are taxes that are collected by the state. There are taxes that are collected by the local government. Okay. So this tax reform just speaks to federal taxes and to some extent maybe state, right? So as long as you are operating in an environment where the law has empowered local government to collect taxes, right? They will continue to collect taxes. Okay, so that I mean is unfortunate, right? But it's there. Now, where arguments, I mean, where we can have a leeway is where the same taxes that you are paying to federal, the state is also asking. In which instance that cannot happen. So, for instance, you pay VAT to the federal, you're not supposed to pay VAT to the local authority. But when you talk about signage, signage is local. Federal government is not going to collect that from you. So I think the only consolation is if you have taxes that are both collected by federal, or even collected by federal, state, and local government, that is where you can say, no, these are multiple taxes, I'm not going to pay it. But to the extent that, the federal is asking you for only federal taxes, and the state is asking you for only state taxes, and then the local government, which is where the real issue is, you can't, I'm not sure there is I don't know what can be done. Maybe it's lobbying that can work in that instance. But normally, the same tax should not be collected by the three arms of government. There's a law on it, right? So it's only when you see that there's an infraction in that regard, that is when you can push it. But to the extent that local government will keep collecting something like, so Lagos, like for instance, Lagos State will do land use charge. I think yes, Lagos State. So if local government comes and say land use, then you can push back because it's not their this thing. But when it comes to signage, it's not a state, it's a local government, I think. So they will still collect it because there's a law that supports them to collect it.
Okay, thank you so much. Prof, just a legal question here. And somebody just asked succinctly. This new law is starting January 2026. Is it going to be retrospective or is it going to start from January?
That's an interesting one because if you going by the guidelines and some of what I'm already seeing, the idea is that it's going to start. It has already taken effect. It was signed into law from June, and ideally, constitutionally speaking, it should not be retrospective. That is affecting what has happened from January to June, but definitely it will affect, what will happen from June and what is currently ongoing in different entities and organizations from June to December. So it will be interesting to see how they work this out. And I think this is a question that I encountered someplace else. So I imagine that the tax authority itself is considering this. We've already seen, some breakdowns, from 2025, you pay this amount for, then it reduces to this and that, and so on. So they're already calculating 2025 into that. But from a legal standpoint, ideally, it should take effect from June 26. 2025 and not before. And so I imagine, as I have said before, that we are likely going to see some challenges to some of these provisions depending on how the implementation occurs, depending on how the tax authority chooses to implement. And this is one of those areas because this is a constitutional principle. So I imagine that from June 2026, we have to start aligning ourselves, and and I think that's one of the reasons why this particular webinar and I hope other events that we're going to be having are important. Thank you.
All right. I think at this stage, we wouldn't mind to take some questions from live participants, especially those that are online. So if you have any specific questions, we will see how many we can take while we are still moving on. You can actually just raise up your hand and they can actually give you opportunity to speak. So while we are on that, I just want to take up Funke again and ask her. There's a lot of emphasis on digital compliance, okay? E-invoicing, tax identification number, record keeping. For a lot of healthcare providers in the past, a lot of them are not as structured as other companies in other industry. What do you foresee and how can healthcare providers prepare for this new regime?
Okay, so thank you. Yes, there's a lot of push for fiscalization, digitalization, but like I said before, it's starting with the big companies, but it will soon get to small and medium companies, and I tell you why it is like that. So there is a provision that has been introduced in the law that says if I'm a hospital, no, or even a smaller facility, right? And the people that you're supplying to, that means your customers, they are a body, they are incorporated body, okay? Incorporated body means that they are already registered, they are a corporate entity, they file returns, and then they pay taxes, as it were. It says that if you are supplying them any equipment, item of equipment, or raw materials, or products, it says that if you don't charge VAT on those things that you are sending to them, right? For the purpose of the company that is benefiting, the taxman would deem that if you never incur that expense. So let's give it as an example. If I make 100 sales and I have expenses that is 70, so technically, I'm only paying tax on 30, which is my profit. Then you apply tax tax at 30%, and then you pay tax of 9. I think it's 9 thereabout. So he's saying that 70, I will only recognize only suppliers that charge VAT on those expenses to you. So that means if I am part of this webinar, I supply and I don't charge VAT, right? And a lot of us supply to that particular company, and maybe a lot of us supply 50 out of the 70. It means that the taxman will set aside the 50 and only recognize 20 as your valid expense. Means you are going to pay tax of 30% on 80, which is 24, rather than 9. So what the hospital will say is that unless you put VAT on your expense, please, I don't want to have any business with you. And you cannot put VAT on your business, right, unless you are registered for VAT. So that is what fiscalization and all these things will do. It will track all the expenses and everything right from onset. And I think I mentioned it earlier on. If you say that, look, this person charged me VAT, this person charged me VAT, I paid so much VAT, but my sales is VAT is zero rated. I don't have anything to use to do that net off. I can go back to the taxman and say, you know what, give me my money back because I've incurred expense. The first thing they are going to ask you is that, let me see those invoices. So when you bring those invoices and even if there are no VAT, they will note those suppliers. and they won't even treat your application. So it's a way of tracking as many transactions as possible. You can remain small for now, but in the interest of time, you get to a point that you just have to comply. Like I said, one of the things they are trying to cure is the fact that the tax base is too small. So they need to widen it. And the only way they can widen it is to digitalize. If you are doing sales, put it on FRS portal. If you are billing somebody, you must pay VAT on it. There's no way, they will have to, one way or the other, unless you don't want to run big. And like if you're a small business, you're still okay for now. It gets to a point in time you need funding. I think you are the one that made reference to funding. You need donor agencies to give you money. Because you are doing something great and you need to expand. They are not going to give you such loan or such funding if you are not structured. And what is being structured? Properly registered, have proper books, proper this, proper that. So it will go round either way or the other. It's just a matter of time. It's a good, like I said, they are going to use a lot of artificial intelligence. I know when I speak to some people in FRS and I know they are working, they are doing a lot of groundwork. People will be surprised when they start rolling out the assessment, or they start tagging this person or tagging this person and saying, yes, you are a director, you are a CFO, but your company is not paying tax. Come and pay the tax. So it will go round. I mean, that's the essence of the digitalization, to make sure that people are captured as much as possible. Now is the time to get everything ready. Now, Prof spoke about the commencement of the act. We don't expect it to be retrospective. So when it means retrospective, I mean, it means that when you look at the effective date, we don't expect them to apply it to transactions before then. But we don't know what it is. It can be, like she said, constitutionally, you can say it was signed. Maybe they pick the date the president signed, or normally they should pick the commencement date. But anything can happen. So that even transactions that are happening now, we don't know. We don't expect it to be covered, but it may be when they start giving it interpretation.
All right. Thank you so much, Funke. I think we have some hands up. Maybe we can just take one or two questions from the online participants before I throw the final questions to the panelists. If the admin can actually admit Capital Hill Hospital for her to or him to speak. Can you just quickly admit Capital Hills the right to speak? Good. Dr. Jennifer, you have your hand up also. Please, can you just go ahead, unmute yourself, and then ask your question.
Hello, I don't know if you can hear me, please.
Yes, we can hear you now.
Okay, thank you. Thank you for a very interesting session. My name is Shade Olarinde from Capital Hospital. Okay, so the number one question I want to clarify, somebody asked whether the insurance premium, like capitation received from HMOs and also their fee for service, they are not, if I heard the answer right, that they are not taxable, right? Am I right?
Ask the second one so that they can take the two questions together.
The second question, how does this new tax law applies to people that are earning above 800,000? Are we still applying the consolidated relief, or the 800,000 will be a deductible as a relief? Or what percentage are we applying for the tax, for the computation of the payroll?
Thank you.
Okay, so I will start with the first one. The first one you were talking about, the fee. What I said is that when you have your revenue, you can, or your sales, or whatever it is that you are reporting as sales, or what you have recognized as revenue, it's always a lumped amount. Okay, when you look at it, you need to unpack it and say what makes up this revenue, right? So if you have 100 in there and you have premiums, you have premiums, you have fees, you have services, then you have to profile it. naturally, when you pay premium is something that is like you are edging against a risk, right? So typically, so you premium should not be liable to tax, okay? But you cannot express a blanket, to say, oh, everything I've earned is exempt. You have to unpack it and say which one relates to premium, which one relates to service, which one relates to reimbursement, which one relates to whatever name that everything is called. You have to unpack it, because that is the only way you can, from a corporate tax perspective, from a VAT perspective, because again, premiums are not liable to VAT. So, but you need to unpack them before you can then say, for instance, if you get an assessment and somebody says, oh, I've seen that you receive a lot of money into your account, oh, come and pay tax on it. No, you need to step back and say, yes, I've received, but this is what it relates to. And which takes us back to track to having a proper documentation in that regard. So that is for that. For the second one, what I've said is that if you earn up to 800,000 per annum, you're not supposed to pay tax, because if you look at the band, the way it is calculated, you see that the first 800,000 is liable to zero tax. So I will use, let's say, if I want to use 2 million as an example, the first 800, you will take it out. You will not pay tax on it. So it is the next 1.2 million that you will then run through the tax table. So that is how it works. And I don't know whether you asked something on consolidated relief allowance, because I saw a question in that regard. There's nothing like consolidated money to replace it with your rent. If you are paying rent, you rent a place and you pay rent, they give you an allowance. So, but generally, how tax is computed for an individual is, if they pay you, let's say they pay you basic housing, transport, everything 10 million, okay? So your gross income is 10 million. What are your relief? What are the things that they give you as relief? Let's say you pay rent of a particular amount. Of course, there's a cap on it, but let's even assume that you pay rent of 3 million out of the 10 million. They take the 3 million out of your 10 million. Okay, then they moved, let's say you have pension, right? So they take your pension again, they remove it out of it. Any statutory obligation that you have that they are taking, maybe national housing, NHS, and things like that. When they have taken everything out, let's say what you are now left with, which is your net income, is about 2.4 million. When you run it through the tax, this thing is saying the first 800,000, 0%. The next one, I think, is cascaded. So that is how you arrive at your annual tax, the tax that you will pay. So that's how it's calculated.
All right. Thank you so much, Funke. I don't think I see any other hand up. Gafar, can we just give 2 minutes to Gafar Madehin to ask his or her question, and then we move very quickly because we are running against time. If it's possible, can you just unmute Gafar to speak? All right. Funke, while we're waiting, a very quick question, because it's something that interests us also in Healthcare Federation of Nigeria. In recent times, we've been talking.
You're muted.
Sorry. We've actually been talking a lot about power in the health sector. We've solicited at the federal government level. We've done a lot of high-level interaction. We just finished the power conference organized by the Federal Ministry of Health and Social Welfare on power. One of the things in this law is actually now a dedicated tax on fossil emission. A lot of our facilities, especially the private healthcare facilities, most times they run on diesel generators and everything. And this fossil emission is something they cannot write off. Now they are going to be taxed for fossil emission. How do we navigate out of this? Or what do you propose for private healthcare providers?
Okay, so like I said, so the law is the law. And when they were putting it together, they didn't have some fine details about one or two things. You are the one experiencing it. Okay, I'm glad when you said there's been a lot of stakeholders engagement. What they need to do is to factor in what you are saying, right? But they are not going to change the law. They will probably not change it. What they'll probably do, and which is, which is when they are coming up with the regulation, is to say that this applies except for, and I know that priority sector is health. Okay, that's the only thing you can have them do for now. So is that engagement that you still need to continue? Because in the past, to change the law is always very, very challenging, right? And that's why we had laws of 1967, 68, 70, and it was recently, I think it was the last government that tried to introduce what we call the Finance Act. And what the Finance Act was basically doing is when they listen to people like you, they bring in things that are operating. What we need is a complete overhaul. And so they did that as a holistic view. So they had a helicopter view. They did it at the macro level. How it's going to pan out at the micro level, some of them are clear to us, like what you are just saying now. But the real details, we don't know, right? So what people are doing is that for specific one, I think I mentioned about the energy and natural resources, because the stakeholders there, they picked it up quickly and said, no, this thing cannot go. It will destroy investment, right? So we are only also going to have a lot of people that are coming up, people like you, to say that, look, and maybe through the Federal Ministry of Health, because that will carry some level of credibility, to say that, look at an average business in operating in this industry. This is their profit margin. When you then and because of the power issue that we have in the country, so they have to run on this, they have to run on that, and this is what it is. And then you present your case. They can make an exception a little bit for you to, for it's going to be a lot of lobbying, but they also recognize the fact that some technical details, they probably didn't have it as at the time that we are coming up with the law. So it's still the engagement, is still, if you call it, in advanced country, they call it lobbying, right? But I don't like to use the word. I like to call it engagement, stakeholders engagement, to see if they can revisit it and maybe make a little bit of waiver for your own type of business. I think
Yeah,
there's a
there
hand
are
up.
like 5 hands
Okay, yeah,
up,
can
and
I
because
can
of
I
our
speak now?
time,
Yeah, I'd
Can
like
I
to ask a
just 1
question.
minute?
Very short
1 minute.
question.
Okay.
we will take
Okay.
We'll take Gafar first. Please let us take Gafar, and then probably we take
Okay.
EMC. After that, if we still have time, but I will take Gafar because his hand was the first that was up. So go ahead, Gafar.
Yeah, thank you very much. And I want to thank HFN for organizing this. It has been very, very educative. But I want to ask, if as a professional you receive an award, maybe professional excellence award of say maybe 1 million, 2 million, whatever, is it taxable? Is it a taxable income? That is one. Then number two, there has been a, there has been a controversy over our facilities, both hospitals, pharmacy, and the rest. Because we register these facilities with our regulatory bodies. Pharmacy council, medical council, and the rest. But then local government, they also demand for business premises. So is this not a conflict? Please, I want you
Thank
to.
you so much. Funke, sorry, please, can you just warehouse that?
Okay.
I want to take maybe like
Um,
one
But
or
it's
two, so that we
taxable.
just take
So
everything together.
let me just
Okay.
straightforward, it's taxable. The first one
Okay.
that he spoke about. So what they've done is that they've introduced winnings, awards, all those things. They are not taxable. But in terms of the legal one, I'll let Prof handle that, please.
Yeah, no, it's taxable. I've won a couple of awards here and there, and that's clearly there. You win anything, you win any prize, and they captured it with different words. That is taxable. It's taxable income. So if you win $100,000, whatever it is, you have to pay taxes on it.
Thank you so much,
That's the
Afa.
straightforward
I think
answer.
I will just take. I saw Funke. I saw Funke Adewara just now. I'm not sure. And just went down again. But while we're waiting for Fumi to come on, let me just quickly take Yemisi Shola Oyegbade very quickly. Please, 2 minutes. If you can make it in 2 minutes, can you just unmute Yemisi, please?
Very insightful discussion. I just wanted to know I'm sorry, I joined a bit late in case you've addressed that, but I wanted to know, is our telehealth services, teleconsultation services, are they taxable? So for instance, if we are working with government or individuals, and we had to write the invoices, do we need to put the VAT and add yeah. Thank you.
Thank you so much, Fumi. Can we just take EMEC and then, because our hand has been up since, if you can just unmute EMEC, Shola Oyewade. Fumi, you can put your hand down. I'm not sure EMEC is there. So go ahead. Can you just answer that question?
Can I go ahead and
Okay,
ask
go
the
ahead.
question?
Yes, please.
Okay. Good healthcare charities. Will I be pre-qualified to do CSR to a healthcare charity and get a tax exemption? Thank you.
Okay, I can take that. So what has happened is that donations are now tax deductible, So prior to now, there were some restrictions as to what the nature of the donation would be, who you can send to,
Yes.
this and that. So that restriction has been removed. But there is a cap to how much you can donate. I think it's a function of I think it's your profit. I can get the actual details, right? So, but generally it is, and what you need to just prove to them is that you made that donation, they acknowledge it, so when you are sending it, I don't expect that you donated. I mean, when you donate it, there will be evidence, right? To say this is a donation to so and so in recognition of whatever it is. You have that statement, and then they probably write back to acknowledge that they received this from you. So donation is now alive, subject to it. I think there's a cap, but it's generally acceptable now. Yes.
Okay,
All
would you be
right.
able to give us that gap later? And is this for
Okay.
all kinds of donations? And is this only to charities or any kind of
Oh, it
donation?
just says donation, right? So it can be to, of course, not be acceptable, right? But generally they
Thank
just
you
say
so much.
donation,
Thank you.
right?
Okay. I think as a follow-up to that question, will some of these donations actually have tax exemptions attached to it so that if you donate for a cause, you can actually get some exemptions on the donations that you have made?
Yeah, so the way it works is that, so typically if you're a body, and that you donate or you donate, right? So what they are saying from a tax perspective is that they will allow it So it's not an exemption thing. It's the fact that you are allowing, you allow that they incur that expense as donation towards a cause, right? So what I'm saying is that before now there were some restrictions around it, being capital or not capital. Even before then, it has to be to an approved enterprise, or you can't do donate for instance to a political party and things like that. But generally, like again, we have to also be careful, because you also need to be sure that that donation is for a cause and it's relevant. So if I'm a healthcare, setup, and I'm donating to a cancer foundation or a this foundation, they know it's related to what you do. So it has to be reasonable, right? So because any expense, anyways, you have to prove there are certain rules around expenses. So you can't just incur cost and bring it for tax to get a tax relief, if I may use that phrase. They will look at it, but it must be backed by evidence. Send it to them, give it to them, they acknowledge it, they thank you for it, so that when they question it, you can then support it. You can support that expense.
Okay. Thank you so, so much, Funke. I have three people here that have been persistent. Their hands have been up, and I'm just going to take those three people very quickly. Musibao Dada, Olayinka Adeyinka, and then Good Luck Uwama. So please, admin, can you just unmute them one by one so that we just take them 2 minutes, please, so that we take our final shot at the panelists. Musiba. Musiba, can you go
Hello,
ahead? You are
good
muted.
afternoon, everyone. Thanks for the insightful discussion. Hello.
Yes, we can hear you. Go ahead.
Okay, my question is concerning the VAT. I want to know, because we've been having issue with some of our suppliers and engineers. Most time when they render service to us, they always claim that we are to pay VAT, although some of them will be able to iron it out. But there's this
Can you
particular
introduce
one.
yourself? We want to know the company you represent also.
Okay,
Thank you.
I'm Musbao Dada. I work with Mother and Child Hospital as an
Okay,
accountant there.
beautiful.
Okay.
Beautiful.
So, as I was saying, concerning VAT, I want to know, is it that the companies in the medical sector, are they exempted from VAT entirely, or just for some specific items? Because we've been having issue with some of these our suppliers and some engineers, whereby when they want to render service to us, they claim that we are to pay VAT, although we'll be able to iron out some with some of them. But this particular one, supply us with networking, that's me one. They insisted that we have to pay VAT, which we have been paying. But I want to know, is it right for us to pay VAT on that particular service or not?
Thank
Yes,
you.
so because the VAT Act specifically mentioned those services that are exempt from VAT. So the question is that what are those companies doing for you? So the company is providing you internet. So the VAT is not about you. It's about what kind of service are they providing. If I'm selling you cars, charge you VAT, right? Because there's no exemption for a body, right? So because they are providing you internet service, they will charge you VAT. Okay, so it's not a blanket. It's not because you are a hospital, and so it's a blanket exemption for it. Depends on the nature of the service. As of today, internet and data and all as it were, it's not an exempt item. So when they are coming to you, they charge VAT.
All right. Thank you so much. So finally, I think I will just take
Let's not
Good luck,
forget
2 minutes.
Dr. Dewara's question.
Okay.
She was asking
Go
about
ahead.
digital health services. I mean, the act doesn't, none of the legislation specifically speak to that, which is another thing I think. So HFN's work is not done. There's a lot still to unpack over the next year, actually. So yeah, it does. If you look at the NTA, it does exempt VAT for medical services, but not for not specifically for digital health services. So we have to make the argument that digital health services offer medical service, what it is. They, of course, have to pay other types of tax that they're required to pay as a company, etc. But they have that, they should be able to claim that zero VAT that is provided for medical services. That would be my answer, Funke. I don't know
No,
if you have
I agree
anything to
with
say
you.
to that.
I mean,
Yeah,
absolutely. I know that you are just being mindful of the fact that the way the
yeah,
taxman looks at it is that once you don't specify something, it's not written in black and
yeah.
white. It's vatable. But when you look at it, it's only that it's being done digitally. It doesn't reflect the
Yes,
fact
it's still
that
the same.
um, it's a medical service, right? So
Yes.
I don't expect again it to come out in the guideline, the guideline. But a medical service is a medical service. It doesn't matter whether you are sitting in front.
Whether it's
It's just
digital
that
or
once you pick up
physical,
the tax law and you are not seeing number 3 or number 2, telemedicine
that you cannot.
or this
That's
thing.
why we
Take good
Yes.
talk.
Woman from St. Mary's Hospital. So, a business name, or should the company maybe convert to a limited liability? Thank you.
All right, thank you. I think you joined late. I think some of these questions were actually taken earlier on, but maybe your first question can actually be taken very quickly.
Prof, you want to take it?
You're muted.
okay. I forget what the first one was. I'm gonna say
The first one was on
yes.
as an hospital. As an hospital, if you render services, are you supposed to charge VAT on the fees that you're charging the patients?
No.
Okay. Ideally, that is what we're calling medical services. You don't have to remit to government. So I imagine that would be, and if you look at the spirit of the law in terms of what is captured, for example, with mandatory health insurance and so on and so forth, where we're seeing, exemptions happen. I think that it should be clear, but that is also why we're having this conversation. And I hope that we will have 5-10 minutes to speak to that. We need to make it clear because we can't that way forward. So bottom line, I don't think.
Then, so the other one is a commercial decision, like I said. I mean, like she said, when you have turnover this much, you need to be structured. And the only way you can, I mean, one of the best ways to structure a business this big is to have it under an incorporated, to be an incorporated entity again, because you get to a point if you are this big, that means there's potential invest in you. They are not going to invest in a company that is not
invest in a business name.
not structured. Yeah.
All right. Thank you so much. I still have a lot of hands up, but I know that we might not be able to take everybody. However, you can actually send your questions. I still see Mrs. hand up. I don't know whether it's the old hand or whether it's a new one. However, you can actually send your questions to the Q&A. We will compile all the questions. I will reply you individually if need be. Just before I go, Prof, quick one, and I'm going to make it a two-in-one question. Number one, what do you think private healthcare providers should start getting in place from now on? That is number one. Number two is that you know us, Healthcare Federation of Nigeria is a coalition for private healthcare providers in the country. And what we try to do is to speak with one voice on behalf of these private healthcare providers. Like I said, a lot of these healthcare providers are still running what we call the mom pop business, where daddy is the director, mommy is the co-director. And it's getting to a stage now that it's quite obvious that we need to structure all these businesses. You are a lawyer and you have consulted for a lot of startups, a lot of other companies. For us in HFA, we want to protect the interest of these healthcare providers that are under us. And we might need to form a consortium and say, we are coming up with this solution. Anybody that is interested can actually benefit from this consolidated service. Where can you come in as a legal partner and also as a consultant? That is for you. And then for Funke, you've actually taken us around all these things, and we've seen the expertise that you bring on board also. And the same question, just like I'm asking Prof, is what I'm going to throw at you, not you as in Funke Oladoke, but also as Deloitte Consulting. In terms of consultancy, because a lot of all these our healthcare providers also are going to need your expertise at one point in time. One of the things that we are ready to do in Healthcare Federation of Nigeria is to be able to bring all these people together and offer them services based on what you can offer. So where can you come in also? So these are questions on a passing glance for the two of you. Prof, I'll take you first.
All right, thank you very much. That's a good question for us to end on. I think just to start with the first remarks that you made, I think that we should start getting ourselves ready. Some of us are more prepared than others because we have always been structured, but this is a time to review our current structure, to look at the pros and cons of that structure, etc. I think it's also a critical period to look at our record system, whatever that might be. If we're still documenting in very rudimentary ways, if we're not using electronic software, etc., this is a time to reconsider that. And in relation to all of that, very critical to support our staff, the people that we're working with, the accountants and others that work with us to develop themselves in relation to this new Nigeria that we're going to live in, to understand, to have both in-house trainings and other types of capacity building and strengthening around some of these. And in relation to that, having the necessary advisory in place, which takes me to one part of your question. I think that, of course, it's critical that, if we don't already have that in place, that we have that in place. And I think that HFN is a big umbrella that can support that. And I'm happy to have those conversations even outside of this meeting about how we can support healthcare providers. I like to say, of course, having worked with different types of entities of different sizes, etc., that the needs are going to be different, and this webinar is only a starting point. There are those that are very, very much in the beginning, just coming into the space. There are startups, there are digital healthcare providers, not as big as Dr. Adewara's Mobi Health, but just coming into the space with solutions. And then there are, bigger facilities that that have turnovers of hundreds of millions of naira. They're not all in the same space, but they might need different types of customized support, and we're very happy to support that. We've also, after this webinar, we'll share that. It will be on our website and other websites where we have looked as a firm at Health Ethics and Law Consulting at some of the specifics, including some of the conversations that we've had today about how these new tax reforms, the implications of these new tax reforms for healthcare businesses of different sizes. And I hope that will be a starting point. And like I've said, we are available to engage with HFN and other advisors in supporting healthcare businesses. Thank you.
Thank you so much. Funke?
Okay, so I'm not going to
I'm
repeat
not
what
putting you on the spot,
I
but
will,
at
no, no,
least.
no, no. I'm not going to
Okay.
repeat what Prof has said. I totally agree. What she has recommended, we are also here to support. I think fundamentally, I think we should all be aware this is a very high, very summarized presentation of the tax reform bill itself, because again, it's not only about because I mean, for people that are, for incorporated entities, you have a lot that really affect you, irrespective of which industry you're in. She mentioned about CGT, everything changed, so many things are changing. So we need to be aware. I will share with you afterwards detailed review that we've done in that regards. People can go around, around it, go through it. And then as a firm, I think we are also willing to support. I know that people always think that, maybe our fees are so high up there, not necessarily, because we also recognize small and medium enterprises. So we have bespoke package, that we can use to support. And of course, I'm going to leave my details. If you have questions, additional questions, clarification, please just reach out. We share the document. You can reach out to me. We have things, areas that you think we can support, but I think generally everybody needs to be prepared. It's happening, and we only have a couple of months to tidy up our affairs and be sure that we are not caught, unaware. So that would be my thought.
All right. Thank you so much, Funke Oladoke. Thank you so much, Professor Cheluchi. We know we cannot finish this discussion even in 3-4 hours, but we've started a journey. And like I've said, we're actually still going to call upon you. One of the areas that we did not mention, I know Prof was trying to mention it, is the issue of the startups, the techs in terms of digitization of the healthcare industry, especially for these private healthcare providers. Probably we will still go ahead and do a second webinar that is actually going to focus on the involvement. We want to call on Dr. Benson Ayodele, first Vice President, Healthcare Federation of Nigeria, to help us thank everybody that has been on this forum. You've been wonderful. It's taken a lot of time. This is 2 hours, and I still have over 200 participants that are still with us here. So, Dr. Benson, I've seen your hand up also. So maybe on a final note, you can just comment.
Thank you so much, our distinguished panelist, Professor Onyemelukwe and Madam Funke. Thank you so much for honoring us in this way with your time. And I believe that we've learned a lot from you already today. We look forward to probably having a part B of this webinar so that we can deepen the conversation like
You are muted, Dr. Benson. Okay.
Yeah, sorry, I was speaking all the while. So sorry. So thank you so much, Professor Nyemelukwe and Madam Funke. Thanks for sharing your expertise with us today on this very important subject matter. We want to believe that when we come back to you for probably a second edition, so to speak, you will still oblige us. I had raised my hand before I was called to give the closing remarks, and it's just in line with Madam Funke's comments that were very cost sensitive, right? So when we come to you as HFN for these further conversations around around working with our stakeholders on their tax-related matters, please, we always need the rock bottom price, the family price. All right. So we need the family price, and probably we may take this offline and see where we can have, even if it is an MOU with Deloitte, MOU with Professor Nyemelukwe's organization, especially as it relates to this matter, so that we can point our stakeholders based on an established relationship. So let me leave it at that. That will be taken offline. Thank you so much for your time and your expertise that you've shared, very eloquently. God bless you all. Thank you.
Thank you so much, Dr. Benson.
Thank you.
Thank
Thank
you
you,
to every
everybody. Thank you.
participant. Thank you for your patience. Thank you for being part of this webinar. Like we have said, a part 2 is coming. Watch out for us. Thank you so much.
Thank you very much.
Thank you.